We've been hearing a lot of things about the coming crash. We have numbers that go range from, oh, it's going to happen next week to it's not going to happen at all. And I'm kind of in between. I think what'll happen is there will be some slowing, but then the investors who have been sitting it out waiting for the downturn will jump in and absorb a number of the houses and properties that will be released because of the downturn. There's a collection of forces, some leading toward a downturn and some leading away from a downturn. One of the ones leading toward a downturn is the marker that Zillow has stopped buying. Well, Zillow stopped buying because they basically looked at their own numbers and believed them. They looked at the numbers and said, oh, these numbers are really good. Oh, we can pay way more for this property than it's being advertised for, so we'll pick it up for a great price. Yeah, they believed their own numbers. And so they bought a bunch of houses and discovered that maybe it wasn't such a good buy. And so they've shut down their buying process. And I'm not thinking that they'll permanently shut it down. They're going to have to reevaluate and reset. And I think they'll come back. Could be 6 months, could be a year before they do that reset. The market's starting to cool. As they say, real estate is national and local. It's local in that each market is separate, but it's influenced by national trends. So there are markets, some of the hot markets are starting to slow down. The area that I'm in, which is Northeast Ohio, is showing some slowing, but not an enormous amount. You have to look at each individual market separately and decide whether it's slowing down. What slowing down means is that the prices will stop rising and the availability of properties will increase. There's a seasonal phenomena right here coming up on Christmas. So if you're listening to this after Christmas, then and into the new year, then you may want to look at things a little differently. But the Christmas period from pretty much Thanksgiving through the end of January, a lot less sales occur. And so a lot of people, the number of days on market increases because what's left on the market are those properties that pretty much have been on the market for a long time already and are going to stay on the market. The ones that come and go really quickly, which affects average days on market, they're basically not transitioning through the marketplace. There is an uptick in foreclosures, but this has been going on for a long time. The banks really don't want the foreclosures. They would rather turn the property around and sell it. And so they want to encourage the folks that are in foreclosure to do that, especially now that the market is high. If they do need to pull the properties back, they're likely to not be very negotiable. And that for investors, makes that a little bit of a challenge. So you can see there are forces up and there are forces down in the marketplace. I think that depending on the individual market, some markets will respond by having more properties on the market and will start to make it more of an investor-friendly environment. And other markets, it's just going to be homeowner paying too much. There's one other force that's affecting this, more specifically in the mid to low range, and that is Airbnb. Because if I'm going to buy a rental, I'm going to look at the cash flow. So I'm going to look at the amount of rent that I'm going to be able to get for a property. And if I can generate, I'll just pick some numbers. It's going to vary a lot by market, but just pick some numbers. So if my normal month-to-month rent is, say, $800 a month, then I'm going to walk away with one, maybe two, maybe $300 a month. If all of a sudden now I look at an Airbnb, I could be getting 1,200, 1,500 a month, and so from 800 to 1,500 is almost double. That means I can pay almost double for buying a property to yield the same percentage cash flow. Well, that's going to affect the overall price of properties and going to push them up. I think at some point, depending on which city you're in, some cities are clamping down on Airbnbs, and all of a sudden now you've got this overpriced property that it's only going to generate $800 in rent, but you've estimated it based on 1,500. Oops, you got a problem. So don't overpay. It's the issue with investments is that you want to keep buying. This is a market that I think is going to continue to go up, and so you need to make sure that you do get properties. You don't want to overpay, so you want to be looking for those diamonds in the rough. If there's a lot of people bidding on a house, just let it go. That means you're probably going to pay too much. As an investor, we want to get properties that are good, solid properties at a nice price. This is the time at which you need to be looking at off-market properties, not on-market properties. So on-market would be things like the MLS, Zillow, Realtor.com, those types of places where you've got a lot of people competing to purchase the properties. What you want to do is start getting into the off-market properties. Some of the wholesalers are getting involved in that, and find those properties that there isn't anybody else that's buying, and get them at a cheap price with lots of repairs. Make sure that you estimate all the repairs properly. So the short answer is the market going to go up or down? Are we going to have a recession? I think the answer in housing is not. I don't think that the continued rise of properties is going to continue. I think it'll level out somewhere around, and this is where the crystal ball gets really, really murky, somewhere around 2024, we'll start to see a true downturn. Right now, there's still too few properties for the number of people that are looking. Supply and demand. So if there's more demand, then pretty much the answer is to go up. We're also going to see high inflation. In some sense, we're already seeing it. The official is 6%. Unofficially, it's closer to 10. When those numbers, you start to add them up year to year to year, that's a lot of inflation. If you're interested in some free training, watch my free training. Click on the button below. See what information that we're giving away for free. Well, happy investing, and you have a fantastic day.